What is going on, you guys, and welcome back to the channel. If you're new here, my name is Brandon. As always, we do have our Investing Academy, which is that first link down below. But in today's video, we're going to be answering the question that I have been bombarded with over the past couple of weeks. I actually had someone ask me that question in person today regarding the Tesla and the Apple stock split. We'll be covering that as part of our Q&A segment. And then we are going to be finishing off this video with our stock challenge update. So if you are somebody that's here for that and you want to just skip right ahead, I'll pop up a little time on the video that you can go skip right ahead to. But let's just dive on into our monthly Q&A, starting with, of course, the question that, in all honesty, could merit its own video, but we'll just address it right here off the bat. And the question comes in from Tom New, and he says, what do you think about the Tesla and Apple stock split? I'm considering to add more of them to my positions as the prices are now more affordable. Thank you. And we highlight here Tom's question, but I know we had a bunch of these on the community tab. My thoughts on the stock split, everybody, is that it really should not be generating as much excitement as it is. It is more or less, any stock split for that matter, but in particular a high case one like these, with these high profile companies, it is truly a non-event. Nothing is happening to the value of the company itself. And if you understand from a base level what a stock split is and what it's out there to achieve, I love to use the example, if you want to look at it with a very simple example, is to think of it like a big pie. So if you had a company which is a big whole pie, and let's assume it was cut into 4 equal quarters. So you got 4 big slices of pie, each representing 25%. If you then went ahead and then cut each of those slices into additional slices, or 10, 15, 20 slices, who cares? It's still the same amount of pie at the end of the day. They're just simply smaller slices. I even heard the example, if you had a cup of coffee and then you just distributed that coffee into 4 additional mugs, you don't have any new coffee generated. There's no new value that's produced. It's exactly what it was before. So the question, should I be buying Tesla or Apple after the stock split, is actually, I know it's a very popular question, but it's actually in a sense a silly question, because what you should be asking yourself is, would you buy Tesla or Apple at a $2,000 price tag or $500, whatever Apple was before the stock split? Because the company itself is still valued at that amount. So it does make it look more, it doesn't make it look more achievable. It is definitely more accessible, especially if you are dealing with lower amounts of money and the $2,000 price tag was out of your range. But very simply, just because the share price is lower doesn't necessarily mean that Tesla's a cheap stock all of a sudden. In fact, if you do want my honest opinion on this, and I don't mean to offend any Tesla shareholders out there, I personally would not be going out and buying Tesla stock at the given moment. I know the shares are dropping down today. I think they were down like 8% or so when I checked earlier. Even Apple stock, for that matter, these stocks have both done very well as of recently. As a credit to them, they've been doing very well as companies. I have nothing against the companies themselves. I used to own both stocks and I still own Apple today. It's just that I wouldn't be buying them at these prices because I think you're, in a sense, chasing the previous gains. We always want to, as an investor, buy low and sell high. And although on the share price, you'll see the stock drop down, think about it as if the stock never did a split and it was still trading for $2,000 a share. Would you want to buy it? That is your question to ask yourself. And in a case like Tesla, knowing how crazy and how sporadic it's been, you could very well buy it and do very well. But from an investor standpoint, if you're actually saying, I want to invest in this company, I first of all think that the run-up has been a little too crazy to be justified. I'd personally be waiting for a better time for both of those companies, although I like the companies both myself. That's my honest opinion on that. Another question from Michael here, Michael's Vlogs. How many stocks would you start with in a $1,000 portfolio if you had to start all over again? And I really did like this question because there's many ways to tackle this question. And I'll start by saying there is no golden number. There's no perfect magic number that you should be doing. A lot of that comes down to personal preference. And you got to ask yourself certain questions like, for example, how many stocks would you like to own in a portfolio? Some people I know like holding a number of stocks, and some people I know like keeping it very concentrated. One thing that I would factor in, a definite factor, is ask yourself what platform you're using, first of all. This actually plays a big role when you're starting off with a smaller amount of money or $1,000. If, for example, you're using Wealthsimple Trade, which is a commission-free platform, you don't have to worry about commissions when you buy and sell, that kind of justifies holding a few more stocks. You can actually split that up amongst a number of picks. Whereas if you're using a Quest Trade, if you're using a TD Direct Investing and actually paying a commission to buy and sell, you don't want to spread yourself so thin that you're paying commissions each time you buy. So if it were me personally, if you're asking if I had to start all over again, I would actually take, there's a big airplane going overhead. We'll give that a second. What I would do is I would take that $1,000 and probably split it up amongst 1 or 2 stocks. And I know that may sound like not a whole lot of diversification, but another key factor that you have to ask yourself is, well, how much money are you going to be adding to your portfolio? If you're going to be adding $1,000 every month, well, then it's fine to take that whole $1,000 and buy one stock. And then next month, buy another stock. And now you got a 50-50 weighting. And the next month you buy a third stock and diversify that way. One of the mistakes that I made starting out when I was younger was I split my money amongst a number of positions. And then as I started to add some more significant chunks of money to my portfolio, those stocks represent a very small portion of my portfolio. I personally like to keep things very equally weighted. So, maybe when I added new money in a couple months down the road, such and such stock wasn't looking as attractive. I didn't want to buy that. I wanted to buy another stock. And then you have this mismatch of weightings. So you do have to do actually a lot of planning. But if it were my case, if I was starting with $1,000 portfolio, I'd pick maybe 2 stocks, a couple stocks to kind of vary the selection. Again, depending on what platform you're using, also depending on how much money you're looking to add to your portfolio. Question from Sheldon Snow. Builds off of it builds off of the Tesla and Apple question, stock split question. Seriously thinking about investing all of my RRSP account money into Apple, Tesla, and Microsoft. Can that even be done? Right now, the money just sits in my RRSP account. To answer that question, number one, can it be done? Of course it can be done, Sheldon. In an RRSP, you can buy pretty much whatever you want. You could buy stock of any publicly traded company, which all 3 of those are in this case. Would I suggest that? Probably not myself personally. Again, we touched on my opinion on those stocks is that I think they are a little bit overinflated at the moment. In fact, I think the market in general is a little bit wonky, it's a time to be a bit cautious. So I wouldn't be going out and buying stocks at high points. I do love Apple. I do love Microsoft as long-term holds. Even Tesla you could throw into there. But would I throw all 3 into those stocks at this point in time? Probably not myself personally. Question from Darren Pinkman. Hey Brandon, I was wondering what happens if a company that you own gets bought out by another company. What happens to your shares? Really, really good question, Darren. And this has happened to me a couple times through my investing career so far. If you invest for a number of years, you will very likely go through this at some point. It's actually quite common that companies merge, they get bought out. In most cases, you get shares of the acquiring company. So if your company is the one that's being bought out, you'll actually get your shares converted into, the ratio is always different depending on how the deal worked, but you'll almost in all cases get shares of the existing company that bought it out. Or in another example, if they're creating a brand new company, you'll actually get shares of that new company. So I think to a company like Potash, which I used to own a number of years back, 3 years ago, Potash, Corporate Saskatchewan, they merged with a company called Agrium. And those were 2 different stocks. And the way that deal was set, the way that merge happened, was that they were creating a brand new company called Nutrien. They merged. I don't own them anymore, but I then own shares of Nutrien. I just went through recently the reverse of that, which was United Technologies splitting into 3 different companies. United Technologies was this one conglomerate. They split into Otis, Carrier, and then United Technologies, or Raytheon Technologies now. Literally one day you open up your account and you'll just have shares of that new company. So if you have a company that is being bought out, you can look into, you'll get all the legal documents. You'll get them in the mail, or if you sign up for e-documents, you'll get them. I always get these proxy forms, all sorts of stuff in the mail that I for the most part, don't read, but it will have all the details in terms of how many shares you're going to get, what's the ratio they're using, but you will get often shares of the acquiring company. Couple more questions before we get into our update. I like the questions here. We had some very insightful questions. This one's from Gorky Bardwaj. Hi, Brandon. Not sure if this question fits the coming video. Blah, blah, blah. How should a person decide before buying a stock? Should he buy under the TFSA or the RRSP? What will the tax deductions be once he decides to sell those stocks? Good question. If you haven't got a good understanding of the RRSP and TFSA, I say this every time, you should go watch both of these videos because those alone may answer this question for you. You will really get a good thorough understanding of how it works. But in both of these accounts, they are tax sheltered. So there's no issue with buying and selling within the accounts. You can buy and sell as much as you want. There's going to be no tax complications. It's when you actually withdraw money that the tax comes into play. So first of all, sorry, let me rephrase that. The tax-free savings account, no tax implications. You don't have to worry about when you buy, sell, the capital gains, any of that. You can just withdraw the money back to your bank account. It's truly a tax-free account. The RRSP, however, you can buy and sell, you can do whatever you want within that account. When you withdraw that money out of the RRSP, that's where the tax complications come into play. And whatever amount you actually take out in that calendar year, that's going to be that you're going to have to add that to your income pretty much, as if you, depending on the amount you take out, you're going to have to take that into your personal income for that year. The CRA will actually withhold a certain amount. It's called they'll withhold the money because you have to pay that. But the main idea with an RRSP is that you are hopefully taking that out years down the road. You put money in, you let it grow, you let it compound, and when you're in retirement in a low tax bracket, that's when you take the money out so that you're getting taxed at a very, very low rate versus, in your working years, you may be taxed at a much higher rate. In terms of the investments inside, how should a person decide what's going to be put in there? Honestly, the way I approach it is you pick whatever investments you think will suit you well. I know so many people like to get so nitpicky about Canadian stocks here, dividend stocks here, US growth stocks here, yada, 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 because of the withholding tax and whatnot. But to me, I'd rather build well-rounded portfolios in both of those accounts, knowing that I have decades out to grow that account. I want to grow that account as best as possible. And in my TFSA, I own a number of great US companies, despite the 15% withholding tax on dividends. I've done a video on that as well. If you want to check that out, again, that's my personal preference. If you do want to split it up because you're so picky about withholding tax and where you allocate your money, you could go as far as saying, I want to put my Canadian stocks in the TFSA and my US stocks in my RRSP, because the Canadian stocks are not subject to the 15% withholding tax. US stocks in the RRSP, there is no withholding tax in the RRSP. So you could do that. Again, to me, that's not the right way to look at it, but it is ultimately at the end of the day personal preference. But I hope that does answer your question. And it is a good question there. Not really sure if it's a good question. It is a really, really good question. And it's good thinking to know, where should I be putting my money? Or where should I be putting such and such stock? To finish off this video, we got one final question before we go into our update for the stock market challenge. Question comes in from Ben Wark. Is there any way to practice investing for a 14-year-old without real money? And the answer to that is absolutely. I know, for example, Questrade is one that I've personally used. They have a practice account, or essentially you can trade and use the platform as if it was your real account, but you're just using play money. They'll give you $500,000 or whatever it is to literally go out and learn how to buy and sell. And you can essentially build a little mock portfolio just to get the hang of things. That's just Questrade. There are really a million other tools. You could look at stock simulators, I believe they're called, or play money, mock money accounts. I'm not the hugest fan of doing that because it could very, very likely instill bad habits, like just buying whatever because there's no gut. You don't have any, there's nothing on the line. You're just kind of playing with fake money and you may learn the wrong habits. But for a 14-year-old, when you don't have much choice, I think that could be the best that you get. So absolutely, you can absolutely practice money with a mock account, and you can find a variety of them out there. But moving right along into our stock challenge update, this is of course our year-long challenge where there's $1,000 on the line for the winner who comes in first place. You're looking at the top 15 leaderboard from last week. So as of last week, we had Joshua and Nareem and Brian all up in a clear race for first, with Joshua up at the top with $771,000. I'll share with you guys now the up-to-date numbers. This is as of the end of August. I actually took these numbers September 1st, just FYI. So in the white, we have no movement in our top two. They've still been hovering at the top. We did have Ken move up a few spots as represented by this green. He moved up from 5th to 3rd this week. Brian slid down. Shauna moved up. Jesse fell down a couple positions. And we did actually have towards the bottom of this top 15, we did have a couple new people enter the top 15 leaderboard in Sheng and Robson. I know in particular, I believe it was Sheng that had good performance out of Neo and Tesla, which have really propelled him up. But that is our look at the leaderboards, guys. We have, 4 more months to go. September, so all of September, October, November, December. So still a lot of time and a lot could happen. But it does seem to be like we have this race up at the front, at the top of the list with Joshua, Nareem, Ken, Brian, and Shauna. Those seem to be really the top 5. I will go ahead now and share on the screen as we do every week or every month. I'll scan through and you can feel free to pause to see how you're doing. Apologize if I go too fast here, but we are going to continue scanning down this list. Feel free to leave a comment down below with what position you're in, whether you're making any moves, whether you're making any big changes. If you didn't catch last month's update, we did actually we scanned over the picks selection. So we went through this entire pick selection to see how people were doing. You can actually go back to that previous video if you forgot what picks you had, but that's really our update for this quick video, guys. Nothing too exciting. Tesla stock has obviously been playing a major part in portfolios like Tesla Ken. Tesla in general has just been a pretty widely held position, but it'll be very interesting to see if this drop continues. Tesla stock again was down. I'm just going to recap here. Today down 6.8%, I believe it closed. So did the bubble finally pop? My speculation, no offense to Ken, is I have a feeling that he's not going to last throughout the remainder of 2020. I think that full Tesla portfolio is going to come back to bite him in the butt because, again, the stock has just gone mad. If you did watch the Q&A section, the beginning part of this video, it's to me a very, very tricky one to assess at the moment. Too much unpredictability, too much uncertainty, and too much excitement and hype that's really jolting the stock left, right, and center. That's just my personal opinion on it. But hey, I guess we'll see. I know there are a lot of people that are making some really good money from it. One of my best friends, aside from the channel, just a close friend, just sold Tesla yesterday or 2 days ago, the day after the split, for a very, very nice profit. So good for him and good for anybody that is holding Tesla. Out of curiosity, if you are holding Tesla, this is aside from the challenge, this is in your personal portfolio. Are you selling after the split? Are you buying, or are you holding strong? Again, don't want to say the bubble popped today. I don't want to overreact to anything, but 6% drop is a nice down day for Tesla. You usually see it being the other way around. But hey, that's it for the video today, guys. I really hope you enjoyed the Q&A. I really hope you enjoyed the quick update on our stock market challenge. Again, there's a $1,000 prize on the line there, so keep staying tuned. If you're in that challenge and you're for some reason not subscribed, we do this update every month, and in closing to the last final months, it's going to get more and more exciting. We're going to really dial into the numbers. We're really going to dial into the position changes, because coming down the final stretch, someone's going to be walking away with a nice prize for our year-long stock market challenge. If you guys enjoyed today's video, feel free to give this one a massive, massive thumbs up. That really helps support the channel. Like I said, you can subscribe if you're new. And then if you do want to learn more about our Investing Academy, you can click that first link down below. We have a community of people all over Canada who want to work in a community environment. They want to learn from the ground up. It's for people that are new, looking for a place where you can ask questions, meet others. We got a meet and greet planned very soon, which is going to be super exciting. It's just a little tricky with the COVID. We're making sure we do it all under the COVID guidelines. Masks, making sure we do it properly and keeping it very tight and very small. we're working out the kinks as we speak. But overall, definitely check that out if you're new. As always, I thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.